I'm an American citizen with permanent residence in Singapore. If I receive dividends, distributions from a Singapore company, where I am a director and owner, would I need to pay tax on that dividend in Singapore? And if do you want to give your response?
To answer a question from Armando, so the dividend you receive from a Singapore company is not taxable in Singapore. But if you are American citizen, I believe Derren can advise, is probably taxable in the States. Yeah.
Yeah, Boon Yip, you're absolutely correct. Every worldwide income is taxable to the U.S., including the dividends that you receive tax-free in Singapore, which leads to another dilemma that company owners like yourself, we have quite a few of our clients, company owners, U.S. exposed company owners. And what they have is a bit of a dilemma. If you remember one of Boon Yip's slides in his deck, and for those who missed it, this is being recorded, so you can go to YouTube or wherever, YouTube, I guess, or to our website, htj.tax, and you can actually look at the recording again. So if you missed Boon Yip's deck, because he mentioned that dividends are tax-free to business owners here in Singapore. So therefore, you are, from a Singapore tax perspective, you're being incentivized to take as much as you can in dividends, but then you're US exposed. So Section 911 of the US tax code, which is perhaps one of the most generous provisions for those who are US exposed and working internationally, where you get a chunk of your income, your salary, free of US tax, and that amount moves with inflation. So I think it's going to be like $112,000 for when you're filing your return for last year. So the first $112,000 plus your deductions and whatever, plus your housing deduction and some of your utilities. So let's say your $150,000 of income, of earned income, will be free of US tax. So therefore, from a US tax perspective, you incentivize to take more as salary and less as dividends, right? You get me? Whereas from a Singapore tax perspective, you're being incentivized to take more as dividends and less as salary. So that's where we work with clients to find that Goldilocks level between how much should you really be taking, thinking of the Singapore perspective as salary, and then how much you should be taking as dividends to get the balance right. And unfortunately, there is no double tax treaty between Singapore and the US like there is with Indonesia to the US, or Philippines to the US, or Australia to the US. So those dividends that you're going to get from your Singapore company are going to be taxed at ordinary tax rates. So it could go up to 35% or whatever tax bracket you're in. And then on top of that, but we deal with this every day. On top of that, because Singapore is in a low tax jurisdiction, a so-called low tax jurisdiction like Hong Kong, you're going to be subject to the profits that you have in the company. There's a deemed distribution, because typically or historically, you would only be taxed from a US perspective, right? On the money that you pull out of that Singapore company in the form of salary or some sort of bonus or consulting fees or whatever, plus dividends. But now there's a tax on the retained earnings. So it's called GILTI, Global Intangible Low Tax Income Tax. And this is one of the provisions under President Trump Tax Cut and Jobs Act back in December 2017. So as a result of that tax, any retained earnings that you have on that company balance sheet, that even though it's not distributed to you, will be taxable to you as the majority owner of that company. So again, some sort of planning would be helpful in terms of getting the tax optimization right.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help at htj.tax to engage us to advise on international tax or business matters.